Hey everyone, welcome back. Today we're analyzing gold with a focus on Elliott Waves. This one's for all our amazing followers, and a special shout out to my friend Hamza in Turkey. Let's check the patterns and see where the market could head next. Patterns whisper, I listen, Mr.NoBody. Alright guys, let's take a look at gold on the weekly chart. This whole move actually started back on November the 30th, 2015. And since then we've got a pretty clean wave 1 into structure. Then came wave 3, which really took off. A strong impulsive run that ended with a truncated fifth wave at the top. Now, based on Elliott Wave rules, I can actually label this pattern in two valid ways. For example, wave 2 of the higher degree, which I currently have as a double zigzag, could also be labeled as a regular flat. I had this alternate view before even starting this YouTube channel, and it still fits perfectly fine with the overall structure. Moving forward, the larger wave 3 shows that classic explosive behavior we often see in commodities. It's now reached the 138.2% Fibonacci extension, measured on a log scale. So the big question right now is this: are we about to see a wave for correction, or has gold still got room to stretch higher? What's interesting here is that waves 1 and 5, inside the larger wave 3, are almost equal, but if that triangle we're seeing in wave 4 turns out to be part of an extension inside wave 3, then this might actually be wave 1 and 2 of the fifth wave of that same higher degree. And yeah, it sounds crazy, but in commodities, especially gold, that kind of extended fifth wave happens all the time. For now, though, I'm keeping it simple, watching for a possible wave for retracement, probably somewhere between the 23.6% and 38.2% fib zone, while also keeping in mind that if the market extends, 161.8% could still be on the table. On the daily chart, the structure of wave 3 is visible in much more detail. Waves 1 and 2 are clearly defined based on labeling, and wave 3 starts off as a leading diagonal. You could even consider 3 mini 1-2 patterns at the very beginning of this move, which gave the next leg incredible momentum. Wave 3 moved fast and strong, followed by wave 4, forming a running triangle. Here, the Elliott Wave Principle really shows its strength, because wave 5 extended, reaching further than waves 1 and 3, in the larger degree wave 3. This is exactly the kind of behavior that could repeat. After wave 3 completes, a triangular pattern appears, and then wave 5 finishes. However, there's a chance for an extended move, meaning gold could rally again, and maybe even hit a new all-time high. At the same time, a sideways or even sharp correction is possible, but until the first 3 waves of the new structure are in place, we can't say for sure which scenario will play out. A sideways pattern is more likely due to the nature of wave 2 in the larger degree, which is labeled as a double zigzag. Right now, our focus is on seeing at least one more extended wave in gold, and possibly silver. The key point is, after any corrective structure breaks the previous peak, the next move should form an impulse, break the prior high, and not drop below the starting point of the new move. On the 2-hour chart, due to the recent drop in gold, we start a bit further back, and use the peak of wave 3 as our reference. Wave 4 can be interpreted as a double zigzag, because the next wave behaves like a leading diagonal. After that, wave 2 forms as a regular flat. These two factors together confirm the market's ability to generate such strong momentum. Leading diagonals usually appear at the start of a fast and strong wave 3, especially when their structure is 5-3-5-3-5 rather than 3-3-3-3-3. Flats, on the other hand, often occur when the market strongly favors continuation, which itself signals potential for further extension. In this structure, waves 1 and 3 of the larger wave 3 are both fast and powerful, and wave 5 has extended beyond both. When wave 5 equals wave 3, we should expect it to extend to the 161.8% Fibonacci level relative to the distance from wave 1 to wave 3. Right now, wave 4 is likely ending near wave 2 of the extended wave 5. We're precisely in the area where breaking the previous high could confirm the start of a new impulse move. However, if this recent drop develops into a deep zigzag, a larger correction should be expected. And most importantly, if the price enters the territory of wave 1, this analysis becomes invalid, and a new scenario emerges. That's our view on gold for now. Watch key levels, follow potential extensions, and remember, momentum matters. Thanks to all our followers, and especially Hamza in Turkey. Keep learning and let the waves guide you. Patterns whisper, I listen, Mr.NoBody.